economics and statistics. And so and so at the end of the day, just thinking about specifics around relevancy, I was taking a lot of courses in school that wasn't relevant to my goals. And so when it came to setting financial priorities and financial goals, I really didn't know what to do because I was confused. So having that on track isn't key. And then lastly, time bound. We're going to get into this a little bit later, or the next slide, long term and short term goals. You want to see how long it's going to take you to actually have a goal. And so as we go to the next slide, thinking about long term and short term, this is solely based off of perspective. Now, in the financial industry, we deem short term as anywhere between 2 years or less, and we deem long term could be 3 years or more. But that's up to you. To some people may view long term as something like hey, it's long term 5 year goal, like going to college. If I had to go to college for 4 to 5 years, or if I went to a community college and it's 2 years, and I want to save towards a car and I want to save towards a house, that can be defined as short term. So again, short term and long term is really defined by your perspective as an individual. And so now we're going to go ahead and move to banking basics.
All right. So once we understand that we do have goals, right? We want to achieve, whether they're 1 year, 5 years, or 10 years down the road, we got to put something basic practices in place to help us to get to that dream. And so as we're looking at basic banking, right? This is fundamental. Maybe many of us already have bank accounts. We understand how bank accounts work. We have a checking account. We have a savings account at a bank. But this is a part of our presentation. So maybe there's a question or something you may have, and we will give you opportunity to ask questions as we get towards the end. But this is just something to really try to think about. If you don't have a banking relationship, we want to encourage you to have one. Check cashing at the local liquor store is not the way to go to build your financial future. We understand that may have been a way that our grandmama did it or our granddaddy did it, but it's definitely something we have to break the mold on. You will spend more money over the life of your career if you're banking that way. If that's your method of banking, you're going to spend more money and expenses and fees and that nature doing that. So having a basic bank account at a bank is fundamental. Okay. So a checking account is one of the best ways to control your spending. It's definitely safer, right, than carrying around cash. Checks and debit cards provide you proof of your purchase, that you pay for something. You can deposit cash or checks right into your account. And then also you can pay, your bills from it. You can also get a bank monthly statement. You have a record of everything you paid if there's ever something that's disputed. And then you can also do a lot of things online now through digital. So these are some of the fundamental things of why you want to have a checking account. It is a powerful tool. Okay. However, there are lots of choices, right? In DC, I say there's a bank on every corner, and if not a bank, there's a credit union. So there's a lot of options out there for you. My suggestion to you is to make sure you ask lots of questions. When you're going into a financial institution, you're wanting to choose them as your bank of choice. Ask questions. Ask questions about fees, right? I tell everybody I don't want any of my clients paying fees. And so you need to ask those questions. Are there going to be any fees with my account? What kind of balances do I need to keep? Are there any perks? What kind of benefits do I get from this account? Do I get free ATMs or, bonus rates on CDs and IRAs? Whatever that looks like, you want to make sure you're picking an account that's going to work best for you. Okay. Now, fundamentally, I'm sure we all hopefully have went through this, right? As high schoolers, this is something they're including now in high school education, but it's just parts of a check. Fundamentally, making sure that we're all good. If we do need to write a check, that we understand the critical parts of the check. One thing, I really never knew until I became a banker, was that the most important part, when you have you have a part over there with the dollar sign where you actually write the numerals of how much your check is for. So let's say you write a check for $100, right? And you put 100.00. That's $100. And then there's a line where you write it out in dollars. Underneath, you'll put one spelling out $100, right? You spell it out. Well, actually, when that person or that banker at the teller window gets that check, the negotiable amount is what's on that line written out, handwritten. So if there's ever discrepancy or something, that is the priority, right? So they're looking at that information. Just always make sure you're writing it out correctly. Just a tip, just something I thought was interesting. All right.
Now, in terms of overdraft protection and overdraft coverage, this question comes up a lot in retail banking. And I can't tell you how many clients that I come to me trying to understand the difference between the two. But I'm going to break it down very simple. Checking accounts that Carmen just explained, has money in it based off of what you put in it. Obviously, if you spend money that you don't have, it can create a negative balance. So, in terms of overdraft protection, every bank, especially Truist, have ways to protect your account in the event that it overdrafts. So, the basic definition, overdraft protection is a service where your bank transfers money to your checking account to cover a transaction. Now, thinking in terms of that account, you can use a savings account to cover the checking account for fees. You can use a credit card. You can use a line of credit. There are different options that Truist Bank have directly to help cover the account to protect itself in the event that it was to actually overdraft. Now, many of you guys may know that from especially those that have like previous banks like Bank of America, Chase, any other bank, I would say overall, every bank has fees to them. And so thinking about overdraft, when you overdraft your account, you receive an insufficient fund fee, and that fee could be anywhere between $34 up to $38. I will say directly, though, not to advertise too much, but Truist has found a way around that with one of our new Truist One solutions, where we have now gotten rid of overdraft fees and return item fees on our account. However, even if you don't choose Truist as your bank and you bank elsewhere, this is still good for you to know and understand because you want to make sure that you protect yourself. So that's what overdraft protection is the ability for Truist or for a bank to transfer money from one account to another to cover you in the event that you don't have the money. Now, in terms of coverage, what is the difference between protection and coverage? So we just talked about protection. Coverage is the opt-in ability. Now, to the bank's discretion, the banks have the ability to allow you to opt in. So what does that mean, opt in? When you opt in, that means that to the bank's discretion, they may allow you to utilize your debit card to spend money you don't have in your account. So to give you an example, if I have 20 bucks in my account and I go to Denny's and my transaction comes to 30 and I'm opted in, if I'm opted in with the bank, hey, the bank may say, hey, listen, because Tyrone has a great relationship, his accounts are not always in a negative, we're going to go ahead and cover that overage. So even though he has 20, he's trying to purchase 30, we're going to go ahead and cover that overage for him. Now we're going to hit him with a fee for doing it. However, we will cover that transaction. That way he's not embarrassed. So that's what it means to opt in. The opt in basically means to give the bank the ability to their discretion to pay transactions that you can't afford out of your account. Now, you also have the option to opt out. And in terms of opting out, that means that, hey, with my debit card, if I don't have the funds in my account, I will be declined. So if I have 20 bucks and I opt out, and then I swipe my card at the restaurant and it comes to 30, I can choose to say, hey, I don't have the funds in my account, don't pay it. And the good thing about True is you can select those features online by opting in and out. And so as we look at the next page, it just goes over, some of those options that you can do in terms of opting in and opting out. It also goes over basic functionalities like overdraft fees, return item fees that may be available, and also funds availability. Thinking about the availability of funds. You may think that when you deposit a check, you have funds in your account, but what if there's a hole in the check? So Truist has a wide variety of information that is really sourced to educate clients on better ways to protect themselves. And again, even though Truist has abolished the fees with their Truist One checking account package, again, other banks have not followed the same guidance. And so therefore, you may be subject to fees when it deals with other financial institutions. So thinking about overdraft protection and overdraft coverage, which is the ability to opt in and opt out, you want to make sure that you fully understand both so that you can have an idea of how to deal with the situation if it actually comes about.
Yep. And we just, this is great information because, we want to make the best choices for ourselves and for our families. And if we can avoid paying fees, let's do that. Let's not spend extra money out of our pocket that we don't have to. When I mentioned earlier about check cashing stores and payday lenders, this is another way of, society taking our money out of our pocket. Check cashing stores and payday lenders, please, please, please try to avoid them. Usually they will charge fees that range from 3% to 5% of your paycheck. Okay, so that's right off the top. You have, $100, they're going to take that 3% or 5% right off the top. That's money we don't want to do. We can have a direct deposit, go right into our bank account. That money is ours. We haven't to pay anybody. They don't have protections for you. So like with a bank account, if you're swiping your debit card, you're 100% protected against fraudulent charges. So if I have my debit card, I'm making a purchase, and let's say somebody takes my card, takes my number, somehow, and I don't even know how they got it, and they make purchases out of my account, I file a fraud dispute, the bank protects me 100%, I get my money back. That happens, with clients, and it's something that, you can definitely bank on, that you'll be protected. And then they don't offer any controls to help you with budget and spend, right? So making sure you're making the best choices when it comes to your banking relationship, that you're asking questions that you understand. And primary and foremost, I always believe in having a personal banker. Now, this is something we do offer you, to have a sit down with a personal banker, someone you can talk to anytime you have a question, right? I don't like calling 800 numbers. I don't know about anybody else, but I want someone who knows me, knows my name. I have their direct number or email address. And anytime I have a question, I can just pick up the phone and call. All right, so go ahead. Tyrone, you talk about it.
Of course. So thinking about checking accounts, of course, and even savings accounts, this is a topic that a lot of people are confused on, and that is FDIC. We've done hundreds of seminars together, both me and Common, and I can tell you right now, the question that comes up is, is my money safe with the bank? Why am I going to put my money in the bank and not keep it under the mattress or in my pocket or anything like that? So what does it mean for your money to be FDIC insured? FDIC stands for the Federal Deposit Insurance Corporation. It insures certain accounts for up to $250,000 and just in case a bank fails. So what does it mean if the bank fails? Well, if you don't know, there are thousands of different banks in the world. Some would say only the top 15 matter, and Truist is number 6 right now. But I would say there are thousands of different banks. You have credit unions, you have banks, you have a lot of different things. Now, with the banks specifically, aside from credit unions, we have historically seen banks fail. And some banks will go bankrupt, or they would get swallowed up by another bank, or something will happen. FDIC is a insurance company that is designed to protect you up to a certain amount of money, which is $250,000. Now, can we insure more than $250,000? Absolutely. The bank has something called aggregated FDIC insurance coverage. This is how multi-million dollar clients are able to deposit $2 million and $3 million and $5 million into their bank and still have it covered. That's definitely a conversation that you will want to sit down with me and Common if you want more information about. But the banks do have the ability to insure more than $250,000 on a daily basis. However, on a basic FDIC level, each individual account, based off the way it's titled, is insured up to $250,000. So as we look at the top slide, we see mutual funds, money market funds, annuities, treasury securities, stocks, and bonds are usually not covered by FDIC, and that is correct. So the difference between the bottom, dealing with CDs and IRAs, and deposit accounts, which are like checking and savings, as opposed to the top, which are securities and investments, the difference is the top is invested in the market, and the bottom are retail accounts that you can go and open up with your everyday bank. And so thinking about that, on the investment side, they are not FDIC covered. Now, there are some investments that are insured, but they're just not FDIC. And that's a conversation that if you're curious, you can always have with your financial advisor or with your accountant or tax advisor. But just know on the retail side, retail products such as checking, savings accounts, I would say money market savings, CDs and IRAs are actually covered under FDIC. But money funds, managed accounts, annuities, investments in stocks and treasuries and securities are not FDIC insured. And so you can always quiz yourself, like if Mary had a checking account with $1,000 balance and a savings account with 20, is it FDIC? Or if John has an IRA for 150 and has 200,000 combined in deposit balances, is it FDIC insured? And so looking at John, so Mary is definitely covered on everything. Now looking at and her money insured by FDIC, if she has savings accounts and checking accounts, the answer is yes. In terms of John, he has 350 total, so only 250 is insured and 100,000 is not. However, the bank do have creative ways to ensure that extra $100,000 that's actually not being covered under his 250 deposit balances. And again, that's a much later conversation. If anybody wants to know, they can definitely ask the question or come talk to us, and we're more than happy to share that information. So when we think about FDIC, that it's very similar. And as a fun fact, I believe most credit unions are NCUA, which is another form of insurance company where they are covered by NCUA. So retail banks like Bank of America, Chase, Truist, and other ones are FDIC, and credit unions are another one. All right, so all of that was an overview of priority in terms of the checking accounts, how to write a check. We went over some type of how to set up financial priorities. And now we're going to go into budgeting and savings. And the reason why budgeting and savings is kind of blended together is because when you think about budgeting, there are three main budgeting strategies that you want to focus on. And so the first one is control spending. When we think of control spending, we really want to think about this and what does it mean to be, controlling your spending. And then we have manage your debt. And then we also have save for your future. And so as we focus on the first one will be controlling your spending.
So controlling your spending, budgeting is definitely something that, that be where we don't always want to hear, right? Because we feel like we're in a box and we got to live on a budget. But I'm telling you, it is the freeing part of your finances that's going to free you to achieve your goals. When you budget, when you live within your means, this is what works. So controlling your spending is the first part of that. You want to make your budget real and reasonable, right? So if I'm somebody who, eats out and I say I eat out and I spend $200 a month eating out, I'm not going to say, okay, I'm going to stop eating out. That's not going to work. Okay, let's be honest. Let's be real. Let's be reasonable. You are going to eat out. So maybe it's not $200. Maybe we say, okay, I'm going to just shave off $50 of that. It's only going to be $150 this month. All right. So let's be real. Let's be reasonable. You can also consider ways to make more money. If we talked about the disposable income earlier, if you find out after your monthly expenses are total that you have more expenses than you have income, okay, this is how we're going to control our spending so that we can get more money into our budget. Cutting costs is usually the easiest way to increase your disposable income, okay? So that just means going through the budget. We talked about the budget sheet earlier, looking for things that you can cut, right? Like I just mentioned, eating out. Let's talk about cable, all right? Cable is another one. Cell phones. Do we really need that upgrade right now? Can we hold off until, the phone is paid off? It's a trick of the enemy that, Apple comes out with a new phone every 6 months because we just got the one 6 months ago. Now we need to upgrade. Can we hold off? I think I had my iPhone 8 for like 4 years or something. My daughter was like, "You're crazy."
These iPhones are like vehicles.
Yeah, it's crazy, right? So
the cost.
Yeah. So let's make some simple, small changes into the things that we spend on, and let's see if we can make a difference. Managing your debt. That's number 2. Okay. So we're controlling spending. We're looking for things that we can cut. Managing your debt. All right. Who do we owe? Paying our bills. All right. Another strategy when you're creating a budget is to set aside funds to pay down your debt. All right. And so this goes back to having extra income at the end of the month. If we're tracking all our expenses and we're in the red, we don't have extra money to pay $10 towards that credit card that we owe, right? We want to pay a little bit extra to the debt that we have. If it's $10, $20, it doesn't have to be $100. Just make some kind of incremental increase to your debt. A golden or a good rule of thumb is to use 10% of your monthly income to pay down debt. Okay, if you can afford to, that's the goal you need to achieve. Reducing debt can increase your credit score, right? And we're going to talk about that later because I know everybody loves to hear about credit, which is an important part of your financial life. All right. And if you can pay more than the minimum of what you owe, the credit card company might say you only owe $25 this month, although you spent $500. Your minimum payment is $25. Okay. If you can't afford to pay the $500 back, which we're going to talk about later, definitely try to pay back as much as you can, more than that minimum amount. Okay. All right. And then finally, the third strategy for budgeting is saving for your future. Again, this comes back to that tracking sheet. How much am I spending on a monthly basis? What things can I cut so that I have extra income at the end of the month? Put 10% of your paycheck into an emergency savings fund. Okay, emergency savings. That is emergencies. That's the plan for what if. Okay, what if the tires go out on my car? What if that happens right now? That's probably at least $400, right? If I get, I have to replace all my tires. Or what if a deer hits me, which it did in November? I wasn't planning for that, but what if some kind of emergency happens? Now I got to rent a car so I can get to work. You need to have emergency savings, a backup plan, right? We recommend that you get to like 3 months of your income in a savings, but you start small. Again, we talked about the SMART golden rule. You want to say, I want to save $1,000 by the end of this year. That's a smart, achievable rule or golden opportunity. So if I say I want to save $1,000 by the end of this year, what does that look like? That means every month I got to at least put in, $100. I put in $100 every month. That's measurable. I can track that I'm doing that every month. At the end of the year, I should have at least, $1,000 to $1,200 at the end of the year. But work towards that. Start small. Think big. All right. Controlling. Definitely talk about retirement. Making sure you're planning for that. If your company offers you a retirement plan, please put that aside and set aside money for a new home, new car, or any other kind of big purchase. Saving is key. Okay. So we want to have a backup plan. We want to have emergency funds, and we'll talk about that more.
And as we think about savings, that Carmen just mentioned, this is an example of a chart. Very basic. This is a person who is, saving money each month, and it gives the breakdown. It gives a monthly breakdown for a year, it gives the yearly savings, and it gives a total savings after 5 years. And so thinking about us, you may be able to save $50, $20 a month, but it does build up over time. And of course, the more you save, the more you're going to see. Now, the $1 million question is, that I get from clients is, why do I want a savings account? I do have clients that have they have a bunch of money in their checking account. They just let the direct deposit go in their checking account. The checking account is a leading package for their online banking, for their debit card use. They pay all their bills out of it. So what's the point of having a savings account? Why am I going to utilize this chart to really start saving? Well, that's what the next slide kind of goes into, is understanding interest. Almost every savings account has what's called an interest rate, which the defined term is annual percentage yield. So when we think about annual percentage rate, which is APR, that's what you're paying to the bank, and which we're going to talk about in terms of credit later. But annual percentage yield is the yield that the bank is paying you. So if we look at the top, it says simple interest. It is the money earned on your original deposit amount. And then we have compound interest, which is the interest you earn is added to the original deposit amount. So just looking at this chart right here, and just looking at, the first year, you save $100. It has an interest rate earned of like 1%. So that's going to earn you $1. And so the total value for that year would be $1.01, like $101. So if you look at this, it just gives you the breakdown, and that tops with a simple interest earning of 1%. And then if you go down below, compound interest earning 1% annually, it goes over how that interest actually builds. So if I have $100 and then I am down at $105, $105 will start building at 1%. And then say if I'm at 107 will start building at 1%. And then it keeps going forth, and so on and so on and so on. So compound is exactly what it is. The interest rate just keeps compounding month after month after month, year after year after year. And so again, these are small basic numbers. We're only dealing with $100 in a scenario, but just think if it was 200,000, just think if it was 2,000, if it was $1 million, if it was 50,000, you will see a significant return in terms of interest rate. Now, as a fun fact for Truist, we are offering rates higher than 1%. So one thing is, where 1% might not seem attractive in this slide, just know that banks do have the ability to offer a lot more than the minimum that you see on the screen right here. We have clients with rates across the board on savings accounts, money market savings accounts, investment products, and especially CDs, which are known as certificate of deposit accounts. So thinking about understanding what is the point of having a savings account, this is why, because the savings account is going to build with interest over time. So that way we can have an understanding of how the interest works. And so thinking about strategies to being a successful saver, this is what you need to ask yourself. You need to put yourself, first. So pay yourself first. it is important as as your rent or electric bill. So first of all, you want to pay yourself. So anything I need to do, any bills I need to pay, anything I need to do for myself, like my utility bill, my rent, my car note, you want to pay that first. The second thing you want to do is set up automatic deposits. I used to do this when I was banking with another bank. I would have my paycheck go into my checking account, and then I would have a feature online where it will automatically transfer like $50 once per month from my checking account into my savings, out of sight, out of mind. So if you do that and you begin to continue to save over months and months and over years and years, you're going to continue to see that balance grow. So automatic is exactly what it is. You want to set up a tool in place so that way the transfers can be automatic. And lastly, start as early as you can. Don't wait. So, I mean, for most of you guys who have jobs or allowance or income or anything, you can start saving as soon as today. Set up a budget, set a plan of action. Talk to yourself and say, hey, how much I want to save each month so that I can set this aside so I can achieve whatever financial goal I want to achieve. And so thinking about savings goals and plannings, everything goes hand in hand. So please ask yourself, when you're saving and when you're planning and you have a goal, first of all, what do you want to achieve? Why are you saving? I tell my clients this all the time. Like just like Carmen mentioned, you want to have 3 months worth of savings saved up. Some financial gurus will say 6 months. So if your monthly expenses are 3,000, some people will say, hey, you got to save until you have 18,000. Standard is three. So if the standard is three and my monthly expenses come to 3,000, that means I want to keep saving until I have 9,000. Now, as a fun fact, again, getting back to that question, what do you want to achieve? There is a such thing as oversaving. Keep that in mind. If your savings goal is 25,000 and you achieve it, think of something else to save towards. Don't keep saving money towards a goal that you've already achieved because now you're oversaving. Give you a client example. We had a client, she had 200,000 in assets, and she was older, and she all her debt was paid off. She didn't have a mortgage. Her car note, everything was done. So she had 200,000 of money freely to invest. And so when she spoke with one of the advisors, we encouraged her to leave 50,000 aside for herself, and she can invest 150,000. The client was wary. She didn't want to let go of the bulk of her money. So she was like, you know what? I don't want to throw all this inside of a savings or an investment. I'm going to give you guys 50,000. So we asked her the question, okay, in the event of an emergency, what matters more to you? What's important? What are you trying to achieve? She said the most important things to her is her roof and her car. She said the roof will be around 10,000 and the car will be around 17. So that's a total of 27,000. So if we round it up, she only needed about $30,000. So we encouraged the client, we're like, listen, how about we set aside 50 and we can do something with the 150 to put it inside of a savings account, that way you can earn more interest. Reason being is because think about it. You just said that in the event of an emergency, you only need $27,000 or even 30,000. So why are you choosing to save more than that? So again, guys, we can oversave. We can become victims to oversaving money. So again, getting back to these questions, what do you want to achieve? Make sure that is direct, that you know what you want, and then achieve it. Also, what are your financial goals? Have the goals laid out. It can be more than one. One goal could be I want to purchase a car. After I purchase a car, I then want to pay off my credit card debt. I want to do this, I want to do that. Whatever the goal is, I want to buy a house. You want to think about that. And of course, lastly, how much will you need for your goal? Set a dollar amount on each goal for your savings that you want to do. Even if you have to open up individual savings accounts for individual purposes, that's okay. Most banks, especially Truist, will allow you to open 9+ accounts. So you can have as many savings accounts as you want. You can have as many checking accounts as you want if there's a need for it. And just think about it. If there's a need for a savings, you can diversify your savings into different segmentations and different goals and financial priorities. And so at the bottom, it is recommended, just like Carmen said, that you save about 10% of your gross income every month, but start with whatever you can. And again, we talked about gross and net. Gross is before taxes. So if you're making 4,000 before taxes and after taxes you're making 3, you want to save out of the non-tax portion, which is gross. So 10% of 4,000 would be $400. Save it if you can, but if you cannot, it's okay. You save what you can.
Absolutely. And I tell clients, start somewhere, right? Maybe it's not $400 a month, but maybe it's $10 a month. The key is to train your mind to get into the habit of always putting something to the side. And once that $10 goes in there for 4 months and you're doing it and you're not touching it, then you're going to say, you know what, I can make that 20. So then you up it to $20 and then maybe 30 and then maybe 50 as your comfort level gets better. But the key is to start so that you have the habit of always paying yourself first. You are the most important person, okay, in this world. So pay yourself first and make that investment. Now, there are some saving options at most financial institutions that you're going to find, right? Because you'll have options of where your money can go. Basic savings account, which Tyrone was just mentioned, and savings account will give you maybe 1, 2, 3% interest rates right now. Rates are going up, so great opportunity now to open a savings account. Also, there's health savings accounts. So those accounts are specifically designed for saving for your health care expenses, right? Those are special types of accounts. As you look to your future, it's something you could put aside every month so that, when you get older, want to retire, you'll have money set aside to pay for those healthcare expenses when you're no longer working. And then there's an IRA. And the IRA is a part of your retirement account. Again, if your employer is offering you a 401k, a 403b, whatever that looks like, please make sure you're investing in that. 401k is a priority as well, because that's your retirement, right? When we get to be 65 years old, we cannot pull out a credit card and pay for the rest of our life, right? It is only what we have saved up in a retirement plan that we're going to be able to live off of. So the younger you start, the better, because you'll have time on your side. If you're starting later, you're going to have to put in more money, make more sacrifices to save more so that you have more money at the end of the day when it comes to retirement, and you're not having to go get a second job. You retired from your main job, now I got to get a second job. So please make these a priority in your life, and we can definitely have further conversation if people have more questions about that.
So guys, we're going to take a 1-minute pause right here. We're about to go into the credit, the build and repair your credit. So me and Carmen just went through checking and savings accounts. We went through FDIC insurance coverage. We went through overdraft protection, overdraft coverage. We went through savings priority, financial goals. It's a lot to take in. So I'm going to give you guys a minute because I know we're going to do Q&A at the end of this. Take about a minute or so to just think about questions you guys want to ask yourselves or you want to ask us around savings, budgeting, financial planning, even banking. And then we're going to come back in 1 minute and then we're going to dive right into the build and repair your credit.
To be honest, I was partially listening, but partially certain details that was kind of going back my head. I did find it very helpful.
We're just taking a
I
minute.
really enjoyed that voice as far as I explained everything. It was very, how can I say, subtle.
Okay.
You know what I'm saying? Reassuring.
Good.
Thank you.
We're just taking a minute or two just to get some questions maybe you may have about anything we've said so far.
That's right.
And we'll get right back started. We're going to talk about credit. So this is an important one, right? Everyone wants to hear more about that. There's one more. All right, any questions that you might have about budgeting, saving, banking? Setting
How's
goals.
everyone feeling? I hope everybody's doing well. So I will try to see if I could send it to you. Those who are at the class, they're sponsored in part by Is a Lunch and Learn. And just know every Wednesday this month, we will have some following months, but Choice is our great partner this month. We want you to bank on you. Black History Month.
You're going in and out. I'm not sure. You're going in and out.
So they are a partner, and we have some upcoming training.
All right, we're about to get started shortly.
I do that. This is liberty.
As we're thinking about this, getting prepared for the build and repair your credit, also want you to just start thinking about where your credit stands today. What is your experience with credit? And if you know what your credit score is, as we're going through this, you want to have that in mind. So you can kind of make some decisions about things you may want to do to improve it. For those of us who are in the room, we got some food here, so we're getting goodies. Yeah,
Welcome to,
thank you. Yeah. Food and everything.
All right, guys, thank you so much for patiently waiting. Truly appreciate it. All right, so we're going to go ahead and dive into build and repair your credit. All right, so credit is one of my favorite topics because I must say I'm a little bit obsessed with credit. When we think about credit, we think about what is a credit score. So I'm going to give you the definition of a credit score. Simple answer is a credit score is your word to a financial institution that you're good at paying your bills on time. That's pretty much it. There are 3 credit bureaus who measures our credit score on a daily basis. Those 3 credit bureaus are Equifax, Experian, and TransUnion. Again, Equifax, Experian, and TransUnion. So when we think of a credit score is designed to as a number to measure how well you're making your payments on time, how well you can manage your debt, how well you can manage your bills, and just your overall word as a person that, hey, if me as a bank, I'm going to trust you with a loan or I'm going to trust you with the mortgage, how good are you at paying that loan or that mortgage back? And so looking at the numbers below, 670 or higher, and this is an industry standard, but if you have above a 670, you're considered having good credit. If you're below 670, you're considered to be between fair or poor credit. So again, industry standard is looking at 670 as the new number as of 2023, of where they want to measure you at. Now, does that say if you have lower than a 670, you can't get nothing? Absolutely not. Some banks, just like Truist, we're not always score driven. Sometimes we do look at the credit history and we look at other factors, but just as a basic, a kind of credit score definition, and as a rule of thumb, your goal should be to get past a 670. Now, why is credit important? Credit is important because it affects every aspect of our life. And if a lot of you guys don't know about credit, credit is in anything. So, for example, I went to switch over a carrier. I went from Verizon to T-Mobile, and when I went from Verizon to T-Mobile, I can tell you right now they did a credit pull, and I'm like, what? Like T-Mobile's pulling my credit to get a phone? And so thinking about that, credit is used and applying for a cell phone, whether you're going to finance it or buy it outright or switch over to another carrier. They check your credit when you're applying for car insurance, whether it's Geico, Nationwide, Allstate, New York Life, whatever. They check your credit for employment. You know, to be in a bank, there's a credit pull to be in the financial industry. If you have security license working for FINRA, or you are trying to get job security clearance for the government, there is a credit check for some jobs that require financial background. In addition to that, even to rent a house, if you're trying to rent an apartment, that landlord is going to do a credit check on you to see and determine your ability to pay. So why are credit scores important? Again, lenders use information to determine whether to lend money to you or not. Obtaining credit can be difficult if you've never had credit or had issues in the past. And that is true, but that's why we're here, because we want to further educate you on, the ins and outs of credit. And all right, guys, can you hear us now?
Yes.
Does it sound better?
Yes.
Yes? Okay, they say it's better.
Okay, perfect. And I just want to make sure you guys can still see our screen.
No, can I? There we go.
Okay, so perfect. So you guys can hear us and see the screen?
Yes.
Perfect. Wonderful. Wonderful. So those are the 4 categories towards credits. Again, 1-star retail credit cards, 2 stars major credit cards, 3 stars auto loans, personal loans, and student loans, and 4 stars of mortgages. So this diagram actually shows what's important and what compiles the credit score. Looking at 35% credit history, that is important. That's your payment history, actually. So if you have a vehicle loan, or if you have a personal loan or a student loan or anything like that, you want to make sure you're making those payments on time, especially with credit cards. So if I have a credit card, a $2,000 credit card, and the minimum payment for that credit card is due on the 25th, you want to make sure that you always pay on or before the due date. Now, the banks, like us or any other creditors, we don't report that it's late until it's 30 days late. However, you never want it to get to that point. You don't want to wait a whole month to actually pay your bill. So if my bill is due December 25th, if I pay it on January 25th, which is a month later, it's going to be reported 30 days late, and it's going to destroy 35% of my credit score and 35% of my credit history. And that missed payment will be there for a very long time. We're talking at least 7 years. So it's very, very important. Now, after 2 or 3 years, it doesn't have so much of an impact, but just that initial impact from missing a payment and being 30 days or more late, you will destroy your history. So rule of thumb, pay on time. You can pay early or pay on time. If the due date is the 25th on your car loan, on your mortgage or your credit card, you actually want to make sure you pay that. Looking at 30% amount owed, this is important. This primarily responds to actually credit cards. So thinking about credit cards, and I'll give you guys an example. The rule of thumb from most financial gurus in the economy is to not spend more than 30% of your credit card available limit, or at least not report it. So when I say reporting, every credit card, for example, I'm gonna use credit cards for an example, every credit card has a due date. About 3 to 5 days after that due date is known as a statement closing date. That statement closing date is the date that that bank or creditor or financial institution will report to all three bureaus, Equifax, Experian, and TransUnion, on the progress of your card. So, for example, if I have a Truist credit card and it's due the 5th of the month, my statement closing date may be the 10th because it's 5 days after the due date, which means that on the 10th of that month, whatever my balance is at that time, Truist is going to report it to all three bureaus. So with the rule of thumb, thinking about the rule of thumb about not spending more than 30%, if I have a $6,000 credit card, 30% of $6,000 is $1,800. So if I spend $1,800, I have $4,200 available to spend on my credit card because I spent $1,800. My goal and your goal would be to not let the balance exceed $1,800 report. So in my case, if my card is due on the 5th and the 10th is coming and they're going to report that on the 10th and my balance is like $2,000, I know that I'm over my 30% limit. So I'm like, no, I'm not going to go ahead and do that. Let me go ahead and pay more on it so that way I can be below that. So in terms of 30% of what makes up your score, it is the amount owed, which could be a compile of your loans, your auto loans, and most importantly, your credit cards. So rule of thumb, keep your credit cards paid off and paid down. They're not intended to be maxed out on a consistent basis. They're intended to be utilized on a consistent basis for purchases for cash rewards. So that's what you want to do. As we look at the 15% length of credit history, that is basically just what it is, length of history, how long you've had credit established. You know, thinking about credit, if I have a credit card for 3 years, not so much history. But if I had a credit card for 17 years, it's a lot of history tied to that. So that is 15%. 10% is new credit. New credit basically means what do I have within a 2-year time period? So thinking about 2 years, 2 years is that magic number when it comes to credit. Any credit that is extended to you and is not at least 2 years or older is considered new. So if I apply for 3 credit cards, one tomorrow, one 5 months from now, and one next year, all 3 of those credit cards are considered new. They will graduate out of new account status when they reach the 2-year mark. So you want to make sure as a consumer or even as a business owner that when you get credit, you want to keep it and let it build. And within that first 2 years, don't apply for too many different credit cards because you don't want to have all these new accounts. So how new your account is and how new your credit is the determination factor. And the last one, 10% from different types of credit. Again, going back to those 4 categories, you know, retail credit cards, major credit cards, personal loans and auto loans and mortgages. If you can have a mixture of all 4, that's great. You're not required to have one in every category or all four. You can have 2 out of 4. You can have 1 out of 4. You can have 3 out of 4. You can have all four. But when you have a good mixture of credit, like multiple credit cards, maybe your car loan, maybe a mortgage, that actually helps you to grow by 10%. But as you can see, again, just remember that all 5 of these factors is what the credit report and the bureaus look at to determine your credit score and where it needs to be.
Right. Such great information. Um, you know, I would say honestly, there was a point in my life where my credit score was probably 500. And, I know what that's like. I know what that feels like. Um, and if anybody's there right now, we want to help you. We want to help you get to that next level. So it's important, and it's a passion for both me and Tyrone to share this information because we know how powerful it is when you're able to say, I have a 700 score when you walk into a place to purchase something. Having been on both sides. And so please, no, we're not preaching to the choir. We're real. We're human beings. Mistakes happen. Life happens to us all. And so, this is why we're here today, because we're sharing from our heart to get you to the next level. This right here on the screen is a credit report sample. And if any of you have used like Credit Karma, or maybe your bank has an app where they're giving you the your credit score, you can see what's on your report, what's bringing it down, or what things you need to work on. This is where it's at. So it's called your credit report, and this is what a financial institution will pull whenever they're reviewing your history. And so, yes, we have a number. You may say my score is 660. Okay, well, let's see what is making it 660, and it'll be on this report. And so you'll be able to identify a lot of information on here when you pull your report. For one, to prevent fraud and identity theft, you want to make sure that you can identify. It'll have your name, it'll have your addresses that you lived at, it'll have your employer information history on there. And so you want to make sure you can identify all that. If there's an address on there you've never lived at, red flag, you may be a victim of identity theft. So making sure that all the information is accurate. When you're looking at, it'll have a summary section at the top. It'll just kind of summarize, if I have 2 credit cards or in a car loan, it'll just like say how many credit cards, how many car loans, whatever, it summarizes it. And then it will go down into breaking down each account. So on this screen, you see, client has a Bank of America card. They have a M&T Bank card. Where is Truist? Okay. Yeah, the Capital One something. So they have a lot of credit opportunities here. And so it looks like, you'll see how they pay, if they pay on time. If they've missed a payment in the last 7 years, it'll show that, their payment history. It'll also show how much they owe on each particular card. So as we were talking about all the breakdown, like Tyrone was just mentioning, this is where all that information is captured. Okay.
Perfect. And so thinking about the credit report, important terms for reading the credit report, because you just saw a really good sample of a credit file. But again, if you don't know what you're reading, you don't understand it, it's pointless. So these 5 categories are what you really want to pay attention to. First one is personal profile. Information like your identity, your name, your address. I'm Tyrone Hopkins Jr. My father's a senior. So if I'm pulling my credit report and I see senior, something's going on. So, I want to make sure that me and my father's information is not commingling. And, if your name is, Daniel Woodchecker and you see Daniel Wood, like, where's the checker? You want to make sure there's no mistakes to your name, to your date of birth, to your address. Because, and why is that important? Because if you're applying for credit and your name comes up differently on your credit file, or your date of birth is not correct, or it doesn't match the date of birth on your ID, the bank may think that you're fraud, or the company. It could be a landlord. If you're applying for credit, if you're applying for rent, they may think that you're not who you are. It could be some identity theft involved. So you really want to make sure that you take a look at the personal profile to understand what's being matched on the personal profile, because that's really important. The next one is credit summary. List of total accounts that you have on there. If you got a Bank of America and a Truist card and you pull your credit report and you see Bank of America, Truist, and American Express, something's going on. I only got 2 cards, so why do I see a third one on here? Pay attention to the accounts that you have. Pay attention to the summary. Look at the details that you have. Look at what's important and look at what you should have. Know who's pulling your credit. Because I will say this, your credit is your responsibility. It's not your parents' responsibility. It's not your spouse. It's not your kids' responsibility. It's not the bank responsibility. Your credit report and your credit score and your identity is solely your responsibility. Looking at public records consist of bankruptcy. It consists of tax liens. It consists of judgment. It consists of everything. So thinking about bankruptcies, tax liens, judgments, illegal holds, garnishments, these things will show up on your public record. As a fun fact, well, not so fun for many, but if you get a tax lien, tax liens and judgments, they remain on your credit report for 14 years. 14 years, and they cannot be removed. So Uncle Sam needs to get his money. There's no way around that. You must pay your taxes. Make sure you don't owe. If you do owe IRS taxes, talk to a tax advisor, set up an installment agreement with the IRS, do what you got to do. But tax liens are huge. Now, in terms of bankruptcy, there are two types of bankruptcy. On the business side is Chapter 11, but we won't get into that because we have another seminar set up for that. But on the personal side, for consumers like us, there are two types of bankruptcies. There are bankruptcy Chapter 7 and Chapter 13. Chapter 13 bankruptcy is defined as the bankruptcy where you have all this debt that you're looking to pay off, but you can't pay it off, so you have to go bankrupt. And so what bankruptcy Chapter 13 does, it consolidates all of your debt, your car loan, your mortgage, your credit cards, into one payment. And with the bankruptcy trustee, what you'll be doing is you'll be making payments between 3 to 5 years to pay off that debt combined. And then at the end of the 5-year period, you will be discharged from the bankruptcy Chapter 13. But the bankruptcy itself will remain on your credit report for 7 years. So that includes the 5 years you're taking to pay it, but it does remain on your credit report for 7 years and can severely impact you getting additional credit in the future. Bankruptcy Chapter 7, on the other hand, is a little bit more aggressive. The Chapter 7 is your debt has to be a certain amount over your income. And what they would do is they will close out all your accounts, they will seize your assets, and you'll be able to reaffirm one debt. And so you get a clean slate. However, following bankruptcy Chapter 7 and getting discharged within 4 to 5 months will remain on your credit report for 10 years. So again, Chapter 13 is 7, Chapter 7 is 10 years. So keep that in mind. Those are just examples of what you don't want in terms of public records. And once you have those liens or judgments or legal holds against you, they will pop up on your credit report. And it doesn't say that Truist or any other bank won't lend to you. We have taken individuals who have filed bankruptcy, historically speaking. But the thing is, when you think about that, you have to explain your situation much harder. You have to provide more documentation. You have to explain, you have to dispute, you have to rebuild credit. So think about that. Category number 4 is credit inquiries. Again, only includes hard inquiries from companies who have assessed your credit. So basically, when you're applying for credit, which is whether it's an auto loan, a mortgage, a credit card, there's a hard inquiry that is landed on your credit report. A hard inquiry is defined as the ability for someone to check your report. So if I am a bank and I'm trying to give you a credit card, I need to pull your credit report. I need to pull either Equifax, TransUnion, or Experian. One of those three we're going to pull. We're going to look at your credit report to see what your score is and to see how your payment history is and those other factors that we talked about. That is considered a credit inquiry. So keep in mind, you don't want too many of those on your report. And when you're looking at your credit report, you want to make sure that there are no credit inquiries that you don't understand. Because if you know you haven't applied for anything in a year and you pull your credit report and you see 5 different inquiries, that means somebody's using your social security number. And somebody's using it. Somebody's out there applying for something in your name and that they have no business doing. And honestly, in retail banking, sometimes we see family. It could be family members. It could be friends. It could be a spouse. It could be a complete stranger. It could be anybody. So again, getting back to the conversation, your job is to protect your credit history at all costs. And the last category, account history. Again, if you know that you had a car loan with Truist for 3 years and you never missed a payment, and somehow we reported you as being 60 days late back in April of 2022, hey, come back and talk to us. Because guess what? If you know you have a clean payment history, you want to check that history. Make sure that there are green check marks on your credit report for every single payment you made. If you missed a payment, own up to it and just go ahead and rebuild from there. But if you haven't missed a payment and it's showing that your account history looks kind of weird, it shows a missed payment, then that means something happened down the line that caused you to miss a payment, that caused that bank to report something on your credit file. And so it's very important that you have an understanding of that. before moving forward.
Absolutely. And, we always tell our clients, please don't pay someone to fix your credit. um, that is, that's extra money going out your pocket that doesn't need to. There are practical things, as we're talking to you today, that you can do to improve your credit score. Okay. And so ways to establish and reestablish credit, to establish credit from, maybe you've never had credit, you never, had a credit card or anything like that. So you want to get yourself established. Open a credit card, usually with, a small, maybe $500 limit or something like that. Maybe a secured credit card with a financial institution. Sometimes you may need a cosigner just to get you started, right? You may need somebody who has good credit to sign on the small loan to get you started with credit, or a credit card, adding your name to their credit card. So there's a ways to do that. Also, sometimes we look at non-traditional credit history to get somebody started. You apply for a credit card, we may ask you, if you don't have any history, we may ask you, okay, give us some non-traditional history to show us that you make payments on time. This may be your rent statement. We may ask you to go to your, company that you rent from and, let them give us a statement to show that you pay your rent on time for the last 12 months, okay? Or maybe it's some kind of other, bill, maybe it's a cell phone bill or a utility bill, something that establishes that you do pay bills on time, okay? To rebuild credit, again, life happens to all of us. Things come up, we miss a payment, or we have expenses that we lost our job. Things happen, right? So you want to get a copy of your credit report right away, all right, if you missed a payment, and fix any issues, right? So we talked about those categories. Tyrone went over the percentages of each category. It's not a magic wand we can wave over it, but we can make incremental steps to improve it. And so if it's something like, I have $1,000 credit card, but it's maxed out. Like I've spent $999 of it, and every month I just pay $25. Okay, that's something we need to look at, and we need to go through the budget, right? Back up, go through the budget, look at our disposable income, look for that extra money. Instead of me paying $25 a month, I'm going to pay $35. All right, because I want to bring that balance down below 30%. I only want to have exposed 30% of my $1,000 credit card. Paying down debt and paying on time. Apply for a loan or credit card with a cosigner. That's another way of rebuilding credit. Opening a checking and savings account. Okay. Again, sometimes we look at non-traditional ways of establishing you. So having a banking account established that's in good graces, you're not overdrafting every week, but you can say that I manage this. I have a savings. I have $1,000 in my savings, and I use my checking account properly. That's a great way of reestablishing yourself. We talked about a secured credit card. We do offer this at Truist. This is a way of clients rebuilding credit. And so it's a secured card, right? So that means you may have like a $400 credit card that we issue to you. You would put $400 into a savings account that's secured. We hold that $400. You cannot touch the $400 as long as you have the $400 credit card. You use the credit card like it's a regular credit card. You go out, maybe buy something small every month, like just pay for your cell phone bill on that credit card. Pay it off every month, okay? After you do that, maybe 6 months to a year, closer to a year probably, and you pay your bill on time, we're reporting that for you, you're building your credit score back up. You're showing that you're responsible again. And after that year, you may be able to, based on what your score is, because you may have went from 660 to 670, 680 now, right? Now you may be able to apply for an unsecured credit card and reestablish yourself. We then give you back the $400, right? So it's not lost, it's just a security. And then to maintain your credit, don't use a credit repair company. I always said that. Please do not pay someone to fix your credit. It's not necessary. There are practical things you can do to improve your credit. If you want to file a dispute, say it's not me, I didn't have that, file dispute. You can do that online through the credit bureaus. It's a click of the button, file dispute. You're paying somebody to do that for you, which is crazy. Don't miss or ignore payments. Try to make your minimum payment at minimum. Do not miss that minimum payment by its due date, and close existing credit accounts. Now that is based on, you know, what kind of credit file you have. For some people, that's necessary. So if I have 10 credit cards, right, I got Macy's, I got Home Depot, I got Target, I got, where else do I shop?
Lord and Taylor.
Yeah, Lord and Taylor, Neiman Marcus, whatever, right? Let's say I have all of them, right? Because every time I go into the store, they say, hey, get 10% off today if you apply for a credit card. Don't do it. Don't do it. 10%, and then they charge me 30% of interest. They're making money, right? So don't do it. But if, let's just say I had all that and I want to get a car, they may tell me I need to close at least 5 of those. Okay, you need to pay them off and close them, and then you can get this car loan. But you got too much exposed credit for us to approve you for the car. What's more important for me right now? Getting that car. I'm going to close those credit cards down. Maybe have a major credit card or 2 major credit cards. I don't really need those store credit cards. So Visa, MasterCard, Discover. That's where I'm at. All right. So that's all I got to say about that.
Wonderful, wonderful. And just to piggyback off of that, you know, tips for using credit responsibly. Definitely want to make sure that we're keeping track of things. Number one, ways to maintain your credit in a smart and productive way. To just read this, you know, you want to keep track of your credit lines, use a budget, save for larger purchases instead of using credit, and review your credit report annually. And so for those that don't know, if you want to write this down, the website is annualcreditreport.com. Again, annualcreditreport.com, all one word. That is a great website to go to pull all 3 of your credit reports for Experian, Equifax, and TransUnion. So that way, at the end of the day, you can see your credit report. Now, annualcreditreport.com does not give you the credit score. It only gives you the report, but not the score. You can get the score from Truist. You can get the, if you have a loan with us or a credit card with us, you can get the score from Credit Karma, myfico.com. You can get the score from anywhere. Scores are given on a consistent basis. Or you can go directly to the Bureau's website, Equifax.com, Experian.com, TransUnion.com. You can go directly to the bureaus and get your report and the score. But annualcreditreport.com is a wonderful website to look at the report, which is the most important. So that way you can see how well you're doing from a report perspective. And it also gives you the ability, it's free. So you can pull it once every 12 months for free. And you can, and I would recommend when you pull the credit report, save it to your computer or desktop as a PDF attachment, because I can tell you right now, each credit report is about 22 pages long. So you want to make sure you have it saved. If you want to print out a waste of paper, that's your choice, but I would say save it to your file so that way you can have it, you can consistently reference it. And then, you know, throughout the credit card companies that you are with, like Truist, Bank of America, Chase, any other, Discover, if they offer an ability to check your score or even your report, you can go ahead and do that on a consistent basis or a monthly basis. So again, you know, you want to track those credit lines, make sure you're not going over your limits, budget consistently. And again, going back to my $6,000 credit card analogy, even if you do decide to max out a card, just make sure you pay it off before your statement closes. And again, credit cards are not intended to be utilized for those large purchases unless you want rewards. But if you do that, make sure you pay it off. For larger purchases, do not make the mistake of having the banks believe that you're living off your credit cards. If I have 4 credit cards and all of them are 10,000 and all of them are maxed out, the bank is going to look at me and say, Tyrone, you are living off your credit cards. You are irresponsible with credit. We can't trust you with more credit. Why? So if I have 4 maxed out credit cards, why am I going to give you another one? It doesn't make any sense. So again, these basic behaviors means the world to creditors when they're looking at your credit report, and it will do wonders for your credit report and your history as well as your score when you think about ways to improve that to get to a better place. And so controlling your debt, again, very simple points. Make a list of your debts. Then you want to rank them from smallest to largest. Then you want to get ahead by making more than a minimum payment, like Carmen was saying. And then once you get out of the debt, try not to get back into it. Very simple. Make a list, rank them, go ahead and pay them, make more than a minimum payment, and then get out of debt. And again, the next slide just kind of goes over an example. Like if you have credit cards, you know, I have a $1,500 credit card, I have a $2,500 credit card, I have a $3,000 car loan. As you can see in this example, this is where you want to go ahead and prioritize the smallest one first, then work on the $2,500 one, and then you want to tackle that $3,000 car loan. So that way you can get them paid simultaneously. Now, based off the interest rate, you may want to prioritize one or the other. That is to your discretion. Again, like I said before, your credit report is your responsibility. So you can play around with it any way you want, but this is just for the basic terminology, and for those people that are new to credit especially, this is a good tool to kind of utilize in terms of making sure that you're taking steps to prioritize which debt you want to pay off first.
Yes, so paying off debt is key to, peace of mind. Not having to owe people money. It's increase your financial security, because you don't owe a lot of people. It also gives you increased life enjoyment, right? Less stress, higher credit score, and you own the asset. If I'm able to pay my car off before I trade it in and get another one, I own that asset, right? So I don't have a car payment, at least for, try to wait a year. So just own it and then sell it and then do better than trading it in and then having to pay, how that goes.
Definitely.
You can't pay it off totally, but you want a new car. So before you finish paying it off, you're going to the car dealership. So whatever you owe, say I still owe $3,000. Now that $3,000 has to be rolled on top of the new payment for the new car. So if I'm paying, $20,000 for the new car, now it's $23,000 because I got to put what I owed on the old car to that one. Now $23,000 for the car that's probably worth $20,000. So I'm already upside down. That's how they get you. Okay, we got to pay attention. This is how we get you. We got to be patient, save money, wait, have reduced stress, improve your credit score, and own your own asset. This is creating wealth.
So guys, that pretty much wraps up the presentation. Honestly, just thinking about resources. Again, we are Truist Bank, and we went over our purpose, mission, and value at the beginning of this presentation. I can tell you right now, one of the things that we really, really focus on is getting out in the communities. And so, thinking about, the abilities that we have, we do have money and mindset. It is actually on our Truist website. If you actually scan the QR code, electronically, or just go to our website and just look, you'll see articles and calculators and tools. You'll see actions and priorities. You'll see financial personality quizzes. And I love the personality quizzes because basically those quizzes would be like, there are actually questions like, if I was in an unstable situation, I needed to pay this, I needed to pay that, what would I do? So those quizzes actually they help you to determine what kind of a person you are. You could be a strong risk taker. You could be an aggressor, like, hey, I'm going to invest my money. I'm going to do this. I'm going to do that. I'm going to buy a house. You could be a medium guy, or you could be a conservative person. You could be like, oh, I'm not going to do that. I'm going to save. I'm going to do this. I'm going to do that. I'm not going to take too much risk. These quizzes help you to determine how you are as an investor, how you are as a consumer, how you are as a business owner when it comes to the financial industry. So it's just very, very much amazing when you think about these quizzes. And so I would say you can always go to our website at truist.com. You can join Money and Mindset, and you can look at the podcast too. With Bright and Brian. Brian Ford is actually one of our, he's the head of the financial wellness. And he's done the 8 pillars of financial health years ago before we merged with BB&T and SunTrust to become Truist. And so thinking about all those resources, everything is on our Truist website in terms of what we need to do. So really love the resources that we offer. And I know that you guys are going to appreciate it as well.
All right. Well, this is the time for you to ask questions. So we are ready for Q&A. Any questions? Yes.
Go for it.
The resources are available through email.
Yes. So the great question. So the question was, are the resources available through email? The answer is absolutely. So what we can do is you can actually put your email address in the Zoom chat, or for anybody that's here, we can collect it, and then we can go ahead and email that information out to you. Me and Carmen also have business cards, so we can hand those out to the individuals that are in person. And then in this seminar attachment, we can also go ahead and take your email from the Zoom link as well.
Yeah, so we'll make sure you get it.
Mm-hmm.
Yeah.
And I'm going to go ahead and move the screen to the Zoom. And let's see the Zoom. So we got the chat up. Perfect. Appreciate everyone. Love the engagement in the chat. So I'm just going to redo the chat. Good morning. My name is Specialist. Yep. So they asked for the recording. So thank you so much, Amanda, for recording the session. Recordings are helpful too, because any information you miss, you can kind of go back and reference accordingly to make sure. And let me just see. All right, so I see a question. Does Credit Karma and Credit Sesame have accurate reporting of your credit score? That's a great question. So the thing about the credit score, there are thousands of scoring systems. So for example, the standard scoring system for the credit bureaus, we'll use Equifax for an example. They range anywhere between 300 up to 830. Experian is 300 up to 850, and TransUnion is 250 up to 900. So each bureau has a different scoring range. However, there are some financial institutions that actually have different types of scoring ranges of how they measure their self. Like, to give an example, some credit unions, if you apply for a credit card from a credit union, one credit union, they use 0 to 400. If you have a 400, that's like having an 830. If you have a 375, that's like having a 780. So different companies use different scoring systems. So to answer your question, Credit Karma and Credit Sesame, and in terms of a scoring system, they're not the most accurate because they're always going to be off by, I would say, a few points. It could be 15 points, it could be 23 points. However, the information is still semi-accurate to a point where you can kind of measure and see where you're at. For Credit Karma specifically, the update with Credit Karma is once every 7 days. And so if you bank with Truist and you have a credit card and we reported your credit card on the 11th, and Credit Karma updated it on the 9th, Credit Karma is not going to do its next update to the 16th, for example. So therefore, by the 16th, it takes 2 business days for us to get that information to the bureau. So if we report it on the 11th, the bureaus will have it on the 13th. So when Credit Karma updates on the 16th, in this example, they will be able to see the updated information. So the answer to your question is not always 100% accurate, but Credit Karma especially acts as a good source to kind of help to know where you're at. And Credit Karma utilizes Equifax and TransUnion. To get Experian, you want to go directly to Experian. And Credit Sesame uses all 3, and Privacy Guard uses all 3 as well. So keep those in mind. They're not always the most accurate. Great question, though. And I see some emails in the chat. We're definitely going to take those down for sure. Any other questions or concerns?
One question.
Go for it.
My name is Sean Price.
How's it going, Sean? Good to see you.
I was wondering, who's leading the class?
Oh,
Is that
Amanda, there's an Amanda. I think she's somewhere in her office, maybe. I don't know. She was in the room, but she stepped out, so I'm not sure.
So I'm gonna be quiet when let's see that portfolio or that PowerPoint.
Okay.
Absolutely.
I'm trying to put it in learn.
Okay.
Absolutely, yeah, most certainly. So the question was who was leading the class, and Amanda, we did tell them that you were leading. You were hosting. You're in charge of hosting the class, and I know that these sessions, when we run these sessions, they're a combination of virtual and in person, because in person we don't always know the turnout, and this is one of the very first sessions that we've done, and so thinking about that, I can truly say that overall. Most of these sessions will be in person, but we will always have virtual capability as well. And I'm not sure if you wanted to add anything to that, Amanda. Let's see. Oh, I think there she is. Okay.
Hi, everyone. I'm here. And again, I'm virtual. And of course, if you were at the Anacostia Arts Center, and I thank you, Mr. Price, for making it. We want you to be here. Thank you for making it. And please be sure to talk to Mr. Tyrone and Ms. Carmen after the session is over. It's nothing like being in person, so you can have some direct follow-up. And I thank everyone for putting their emails in the chat so you can follow up with our amazing partners in this. They've given some salient information, some substance, something that you could actually have to actually make sure that you move forward as it relates to budgeting and understand the bank's perspective when they're looking at you. We all like to wear what identifies us as us, so we think, right? So your credit report and your financial portfolio is supposed to speak to who you are, how responsible you are, how bankable you are, how obtainable a loan or a line of credit or credit cards or just funding in general, how attractive you are. So make sure that your credit report, all of your financial history, even, any plan that you have going forward to a bank, it speaks well of who you are. We want you to represent yourself well in the banking realm, as in just in life in general. Again, it's about leaving legacy, and you want them to know how responsible and how well you manage your money. And again, manage your time. Put some time into your financials. Think about your goals, what you want to accomplish in this year and beyond, what you want your family to accomplish, your community to accomplish. Yes, I am here, Mr. Price, and I am attending virtually. And thank you for coming. I am hearing you all. And you could take it over. I just wanted to add that in. Thank you.
No, thank you, Amanda. We truly appreciate that. And trust me, if it wasn't for Amanda, we wouldn't even be here. To give you some backstory, me and Amanda, we actually met at the Black Wealth Summit back in, I believe it was October of last year, and it was quite amazing. And thinking about Black History Month, today being that start of Black History Month, Truist wanted to be out and about even more, because I can tell you right now, this is what we do on a consistent basis. We have sessions set up. It's going to be a session every Wednesday, Amanda and Truist. And I can tell you right now, without her being a resource and allowing us as an institution to be here to present, she helps us to continue to do what we need to do in the communities. And so we knew that the Anacostia Art Center is one that we needed to be at today, and just highlighting Black History Month and what it means. And then also the Black Wealth Summit and how we met is perfect.
One question.
Go for it.
Yeah, work in the urban, because I live pretty behind the house.
Nice.
I'd say where they on City Street.
Mhm.
And I was wondering, like, if I come in our buildings and I things like I do right now.
Mhm.
You know what I'm saying? If y'all, how I'm gonna say it, like I went to school for business and all that. You know what I'm saying? I'm willing to help my community. I live right there behind First Douglas House.
Mhm.
If you ever heard of Edgewood Apartments,
That's right around the corner, right? Yeah.
Right behind the First Douglas House.
Mhm.
Like, so you've been calling the red brick building.
Yep, understood.
Yeah, I live 4045 6th Street. Yeah, and I'm just like to keep with my youth. And like, I'm 41 years old, and I fell off the bill. I got in a little bit of trouble and things in my life, and I'm just willing to like educate myself and get myself back into the community. Was that I had to start on trouble or anything. I just wanted to like live life and just like learn a couple more things. I want to know what you're saying, if we could network with each other
Mhm.
and ask questions, or if I come down here, or we can network with each other, that could exchange phone numbers, emails, or anything. That's what I want to do. I'm saying, to make sure my family or my friends or anybody not to be in trouble, or not in trouble, or like go back on the street life, you know what I'm saying, jail wise, or anything, stuff like that. You know,
Understood.
because I do have a criminal background.
Mhm.
And I just want to give back to the community.
Yeah, so the question was, he definitely wants to be involved, wants to network, give back to the community and get into the community to network. And I can tell you right now, and I know that's a question more for Amanda, because I know this Truist is everywhere. And so we go out, we come here, we're going to be coming here consistently. And then we're all out and about as well. So we're all over DC, the DMV area overall. I would say in your local community, thinking about the Anacostia Art Center, you definitely want to partner with Amanda to see if there's any opportunities for those type of networking within the community. Because outside from this presentation, which is considered banking and budgeting basics, there are so much things going on in DC around the scenes that a lot of people, including us, are not even aware of. And so I think what you're doing today is the best start. That's how you start. You know, get engaged, coming to the seminar and hearing what we have to say, maybe being a part of the next seminars that we have coming up, because we have one on the 8th, the 15th, and the 22nd of this month. And so being actively engaged, meeting the partners, meeting the host of this organization, I can tell you right now, that's the best place to network. And so although you might not get the answer in the same day, I would say, or gradually over time, as more events come up, you know, I would say communities are always looking to see how they can grow that ability to be able to network. And I would say, Amanda, if you wanted to comment a little bit on that, he's looking to see if there's any opportunities for him to network, maybe speak with somebody. I would say probably here at the Anacostia Center as well.
Sure. Calvin, raise your hand. Make sure everyone know who you are. He is our customer service specialist at the Fresh Food Factories Market, which is in one of the spaces at the Anacostia Art Center. So he manages in my absence. He is there, so you could leave your information with him. We have most of everyone's information. There is a registration table, so make sure you sign up and leave us your information so we could keep in contact and constant contact with each other. We want to make sure that you are connected with other resources in the community. And it is a vetting process. We do want to be careful and mindful of who we entrust our trainees to or with or what have you. We host different trainings throughout the year. Some are open to the public, a lot with different cohorts. We work with federal government as well as DC government as it relates to training offerings. So again, it's about increasing the health and wealth of the community. And we are serious about it. And we are serious about our strategic partners. So we want everyone who wants to be involved, but we want to make sure that you are an asset and you bring a value to the experience. Keep connected with us. Make sure that you go back into Eventbrite where you've registered, or go to Constant Contacts or what have you, and connect with us. Make sure you've registered for the upcoming classes that Mr. Tyrone had spoken to. Make sure you connect with us on social sites. We will look to put this on our YouTube page so you could actually have that as well. But again, stay connected. You're at the right place. And we have other locations that are being built out. So again, you know, when it comes to food access, when it comes to addressing health disparities as it relates to food, as it relates to housing, we're working with developers about matching this type of experience to their developments to make sure our communities have direct access. They could just come downstairs of their living quarters and, you know, get great access to food, get great access to community, get great access to workshops like this. And Truist will be at those and other strategic partners where community could be fed physically, mentally, and spiritually through these amazing workshops. And again, this is feeding us, not just with the lunch sets there, but it's stimulating us mentally and spiritually. We need to actually do this for community. So this is about that connection with self and community and et cetera. Fulfill your purpose in life. And this is a part of it. And thank you again for that.
No, thank you, Amanda. Very informative. I love it. And I saw a question in the chat. We mentioned separate business credit, and do we have a date schedule? So the business financing basic is scheduled for February 23rd, and I believe it's here at the same location. I would say it's an overview of getting business clients involved in multicultural banking and understanding the ins and outs of what we do at Truist and what they would need for the economy. Like myself, I was one of the few that was underwriting PPP loans for business clients back in 2020 when the pandemic hit. So thinking about, budgeting in ways that we can actually go ahead and do what we need to do. That was very important. If so, that seminar will be on February 22nd. But if there was any additional information that you would like in the attachment, and I'll put our information in the chat, it will be our office number for me and Carmen, as well as our email addresses. So if you guys had individual questions that are outside of the sessions, we're more than happy to help with that, because we do small business consumer and consumer lending on a consistent basis. All right. Any other questions? I think that's all the questions we have, Amanda.
Awesome. Oh, well, I thank everyone for being here. I know a couple of people said thank you, and you're welcome. And thank you again for being here. Make sure that you come again. It's from 12 to 2, Lunch and Learns. Be here in person if you can. If not, always you could join via Zoom. We want to make sure that this is accessible to you. So again, tell your friends, tell your family, tell people in your community, your neighbor. We need it. We all need it. They need it. They need it. So people need information. Knowledge is key, and people perish from a lack of knowledge. So again, we have great strategic partners that's given us a wealth of information. And again, thank you, Truist, for being an amazing partner and for being a great stakeholder in the community. Everyone knows where the closest Truist is to you, but the closest Truist to the Anacostia Art Center is like within 2 blocks away. So you have a Truist in your neighborhood, but we want you to, again, make sure whatever bank you choose, make sure whatever credit report system you look through, look at your credit, make sure that you have a bank account. Don't go to an entity that's going to really, take the monies that you've earned and deserve from you. Establish a bank account, connect with the people who are here. We're not telling you, what to do, but we're giving you some advice, and we're hoping that you take heed to some of the advice. Again, we're doing this to support you. We want to increase your health as well as your wealth. Stay connected, and I bid you a good day.
Thank you, Amanda. Thank you. Thank you for having us, guys.
Thank you.